Very good morning, everyone, and welcome to the channel. So today we've got this is the one we've been waiting for. This is the NZD CAD setup. Now, for anyone watching my videos, you would see that we've highlighted this one in the previous week ahead series. And the reason for liking this trade is due to market cycle, which provides the general context for the trade. Context means, why are we trading here? Why are we trading in this direction? What gives me confidence for that? And it's also, we're looking for entries into that trend. We're looking for harmonic patterns. Harmonic patterns, obviously, you have to do some research yourself, but they are movements in price that have a particular distinct number of pip moves. And you can literally copy and move that piece around the chart and see that it does generate high probability turning points. So harmonic patterns also are very mechanical. So let's start on the big picture. So we have the big picture. So for those that aren't familiar, there is a cycle that exists in the market up and down, and some legs are longer than the other, but let me just draw it basically for you. This is it on the way down. It's simply a staircase like this, and I am not kidding you. This is it, and it will just do this forever. You know, it might do bigger ones here and keep wandering and meandering. These all have identification points. So ultimately, these are consolidation zones here, consolidation zone here. And as you can see, as I'm drawing this and you're looking at the chart in the background, you should have some like, okay, thoughts going on. Because if you look through my channel on the back of looking at this, you will see the number 3 does work. So I'll leave that for now. What we can see in the chart above is the New Zealand dollar, Canadian dollar. We can see this pattern here. There is more to it than this. There are EMAs that you need to use and understand when levels are confirmed. But generally, it's a visual thing. These consolidation zones, they can alternate. And there are 2 types of consolidation zones. We have one, which is simply a chop. And we have another, which is like a zigzag, which is the ABCD pattern. So these can go up or down. You know, if it's going down, show you here, you know, that's the down or whatnot. So what can we see in the chart below, ladies and gentlemen? What can we see? What can we see? So what we can see here is the red ABCD. I'm going to do it really roughly. So we got that type of consolidation here. Okay. What about down here? Same. We got that one given to us twice. Okay, gotcha. What about on the other side? Got it here as well. In that first consolidation, remember, this is 1, 2, this is 3. So we are here at the minute. We're on the one up, and it's given this little segment down an ABCD. So we have this structure like that. We are going to expect this to play out exactly like this now. Copy. We're expecting that. Ultimately, guys, what can you see on the smaller time frame? You can see that pattern again here. 1, 2, 3 to the low, 1 up. This is what we're waiting for. We're now drilling down to the lower time frames. You can now see the ABCD structure. We have got a leg here, A, B, C, D. You can see it here, 1, 2, 3. So this is an awesome area to get long NZD CAD off the 78.6% retracement. For completeness, should I draw it neatly? I think you get the general message. So yeah, this is one to get involved with. This is one to feel confident with buying into. And this is quite a nice angle to show you guys. So we have the ABCD pattern. So that's one harmonic leg. This is a second harmonic leg. So rule book is 60% of the time AB equals CD. So 60% of the time price will stop there. The other 40% of the time, price won't stop there and it will continue. It will continue to the point where AB, so let's label it up. AB is CD. Oh, where's CD? AB equals CD, and we have the anchor point down here. So we are dealing high probability here. So the mechanical nature of these setups, mechanical is quite a buzzword in trading. Mechanical, what's the other word for mechanical, where you follow a set of instructions and you have to validate, okay, the rules. Let's say there are rules for this pattern to be valid, and we are going to just draw them in here. So first of all, we have the ABCD structure. The standard ABCD pattern completes there. Obviously, lots of people, institutions will be buying off that. And the subsequent move we've seen here is a stop hunt. Stop hunt's typically 25 to 50 pips. Let's just see what it is below here. 29, 30, standard sort of range. So let's start measuring it up. First of all, with the harmonics, you start obviously with the AB leg, and you look to see where C comes into. So C comes into the 78.6% level. So now this is step one, configure that line. It all has to look neat. Otherwise it bothers me. So we'll delete that fib now, color in the level, 78.6. Right, let's go to here first. So I'm going to adjust this slightly. First of all, I'm going to measure it with the fib tool. So I'm looking for where D is in relation to XA. It's got a bit overboard there. So D is right on the 78.6% retracement, which is a huge Fibonacci ratio that typically always acts as some kind of resistance. So we have the 78.6% retracement, but as you can see, price has, this here is the, let me just fill that in, 0.6%. Let me bring down this dotted line. Oh, printing too many of those at the minute. Let me see if I can grab him. Come here, you. So that is there, and let me grab here. So that's 78.6% retracement. Now, what we have to see is where does D come in relation to BC? So that, because D has gone past B, as it must, it's therefore an extension and not a retracement. So we're going to take that to there. And what you can see there is it's a 161.8 extension. And obviously you're starting to work things out here in your head. These are looking pretty good. You've got this 161.8 extension. You've got the 78.6% retracement. Here, let's see where B falls in relation to XA. This is step number 3. We can see that falls at a 50% fib. So we'll label him up 50%. Now, the issue when I went, let's go back to the 60% of AB equals CD, it completes here. So that hasn't happened here. So not only have we got the support, the 78.6, we have the 161.8. So that must therefore be adjusted to there. Now, to show you the other alternative for this ABCD, remember 40% of the time CD is an extension of AB. So get the fib extension tool, drag it down to D, drag it back up to the top. And what do we have? We're close. We're pretty close to the 127 extension of CD. And because of that, things aren't always exact, by the way. In particular, if they were, everyone would be making money. So you have to have experience on your side. Some patterns complete earlier than others. So let's just neaten this all up. What we can see is it's quite a steep slope at the moment. So if we're keeping things time and price, so this slope equaling this slope, it means that this is a little bit heavy to the downside at the moment. But the pattern's there. This is a high probability situation. And just to highlight that this CD leg could be complete here, you've got a 1, got a 2, and a 3. So there we have it, folks. I hope you can take something away from this video and apply it to your own trading. Please like and subscribe, and I wish you all the best.